Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Tuesday, January 2nd, 2018. Happy New Year, everyone. I'm Frank Ochoa, aka PivotBoss, wishing you the very best in 2018 to come. Now let's take a look here at the daily time frame of the ES. Here's a look at the uptrend that we currently have in the market right now. Very, very bullish overall. Obviously flatlined here in the last week plus of the market, heading into the end of the year, but we still have a very bullish stacked and sloped relationship right here. You can see to begin the new year and the new month here, we have a higher value relationship. We have LVNs that are still down below, so even if price were to tumble back toward the LVNs down here and the previous month's low, it could still provide a great opportunity for bulls to come in and defend and return these prices back toward recent highs. So again, once you have a very bullish trending market overall and you close the year on highs, there is a tendency to see some sort of selling pressure here, at least at the early part of the month, but that doesn't always have to be the case. Again, until the market breaks its trend, we got to continue to look to defend rotations, counter trend rotations for a shot at new highs. And so right now, looking to see how much of a pullback, if any, we see, because any pullback could still be a buying opportunity until proven otherwise. So right now, still bullish overall, and the higher value relationship will be very, very important should price test 2650 sometime early this month. Let's take a look here at the NQ right now. The NQ overall been very bullish as well. This one very similar to the ES, but is right inside the trigger zone of the PIMAs right here. So uptrending behavior, stacked and sloped, right inside the trigger zone overall, retesting the FOMC key level from December 13th. It took a bid here, could not continue higher, came back to retest it and is sitting right on it. So again, right here in this trigger zone, where this LVN is, that's still a very, very good spot right here for bulls to look to defend and return back toward highs. Any failure to hold that level could rotate prices right back toward 62.38, which is the FOMC key level from November 1st. That's going to be the next support level down if prices can't get going higher. So any failure to reestablish back above 64.50 suggests a return back towards 62.38. And again, any pullback toward that zone would be a big time buying opportunity for bulls, at least on a first test basis. All right, let's take a look here at crude oil. Crude oil's had quite a run here to close out 2017. A nice rally here overall. You can see right here, this is the FOMC key level from December 13th. It's been bid and really never came back to retest that level. That level is still open for a retest, and you can see right here, that's the previous year's high, the previous month's high, and so far we're seeing early signs of rejection at that zone. That could provide at least a little bit of a pullback toward the pivot range and toward the trigger zone here. That would put you back toward about 58s. So any pullback toward about 58 could be seen here as a buying opportunity yet again. Any failure to hold 58 again could have a retest of the FOMC key level at 56.83. So right now, early signs of rejection here, still very, very early, but that could provide at least a little bit of a pullback toward 58s and perhaps as low as 56.83. Again, we knew this from the very beginning. If price was going to establish acceptance above 55s, there was a shot to see a move from 55 to 60 and as high as 62 overall. That's the new price distribution above 55. So this thing's going to remain bullish as long as 55s remain intact, but that means that we could still see price retrade the entire range from 55 up to 60 and higher. So right now, seeing early signs of rejection up here, that could at least signal a return to 58 with a shot to see even a move back toward that FOMC key level at 56.83. Let's take a look at gold. Gold's been incredible here. Obviously, this one had a significant rally to close out the year. One thing we talked about when we last spoke was reestablishing acceptance above the 1262.80s. That's the bottom of this key level right here. We mentioned before that the way that it broke down, bears were going to try and defend here, but once price pushed above the midpoint of this day and started to reestablish here above 1262.80, the expectation was that we would likely see a return all the way to the opposite side of the range. That's 1305 to 1310, and you can see how price played out right into that zone to end the year. So that's pretty fantastic how this thing just kind of really rallied based off of this key level down here. It's what we talk about every time. If this is the key range and price is failing to hold below the bottom of that key range, there's high odds that we're going to retrade back across the range, and that's what happened here. Now what happens from here is price is now outside of the key range yet again, just above it, just above the previous month's high. We could continue to see more strength, but if there's any failure to hold above that 1308.40, again, we could be looking at a return to value. That's 1280 half. So right now, what I'll be looking for is any signs of rejection up here. If we see any rejection over the next day or two, that could lead price right back to value. Otherwise, staying above 1308 could suggest more strength. But right now, watching for signs of rejection. All right, that's it for now. Let's see how this plays out heading into the new year of trading. Good luck, trade well, and I'll see you in the trading room.